Good morning and welcome. Happy Friday. Yeah, the rain is here in the Valley of the Sun. You know what? I forgot what it looked like. It's been a while. We had a pretty dry, I guess, winter here in Arizona, but it has been raining pretty much all morning long. Going to rain for most of the day, but then it's going to clear out of here for the weekend. I hope the weather's better where you are. You know, rain here is interesting. We all love it. No one knows how to drive in it. It's always interesting. Usually it's a busy. Let's just say cops are going to be busy today. A lot of traffic accidents are probably going to be going on, and then I feel bad for all those people because the insurance companies are going to really whack you. But we got a lot of things to talk about today. We got the jobs number that we've been waiting on. Scott Bessent, the Treasury Secretary, making some very, very interesting comments about the economy and just a lot of other things out there. The president this morning talking about the getting Ukraine and Russia to the table. Apparently, it's on. There's going to be a meeting in Riyadh after, I guess, we got an apology from Zelensky, which made him happy. We'll see how that progresses. And the tariffs. Canada and Mexico, we're going to go to that agreement that Trump had in place beforehand. That's about 50% of the goods from Mexico are covered under that. 38% in Canada. The rest of them, tariffs are on the other products, and then those products, April the 2nd. So we got some clarity finally. Obviously, we talked about that yesterday. Probably not. Didn't handle it the best way. Could have been handled better, that's for sure. Our toll-free number, 800-951-0592. The website at allamericangold.com. On the border, the restaurant chain, they're the latest now to be filing bankruptcy. We didn't get great news. It was okay out of Costco. They started talking about the same thing everyone's talking about, right? The consumer kind of slowing down and worries about what is going on with tariffs and how much prices are going to have to go up. Kroger, same thing. So obviously Kroger, that's Fry's here in Arizona, and I forget Colorado. So they fly all kinds of men. Them and Walmart are really the two big players in the grocery industry, saying that their expectations for 2025 well short of analyst estimates, and they're saying there's mounting headwinds and saying that the facing factors that are, quote, outside of our control, and they are unable to provide a full reconciliation of its earnings projections without unreasonable effort, because it is impossible to predict certain adjustment items with any reasonable degree of certainty. So I guess a complicated way of saying, hey, listen, we don't know. Until we see what the tariffs are actually going to be, how long they're going to be. But either way, we can't provide guidance with any certainty. And I think that's really what it is. I think right now that's the question, right? Everyone's, okay, there's going to be a price to pay for all of the cutting. There's going to be a price to pay for the tariffs. What are those going to be? And the Treasury Secretary, in an interview this morning on CNBC, they're always on there, right? They got to try to deliver the message, saying that we could be seeing the economy that we inherited, right, and it's not their fault that they inherited, starting to roll over a little bit. There is going to be a natural adjustment as we move away from public spending to private spending. And that's, listen, that's honest. I'll appreciate the honesty. I think it's going to be a lot bigger than people want. But there's no doubt that the question is going to be, I think that's the uncertainty. How big of an adjustment is it going to be? And when they talk about adjustment, listen, this is where they talk about the economy, layoffs. We saw what Challenger Gray and Christmas said yesterday, the amount of planned layoffs on the rise. We had a bunch of companies again today saying that they were going to be laying people off. And then how soon do we get the private sector to start firing? And that's going to be the question. You know, a lot of the private sector's tied to the government, tied to the public sector. The economy, he's saying that have become addicted to government spending. There's going to be a detox period. So, you know, we've used that analogy a lot, right? We're addicted to debt, and there's going to be a detox period. Both him and Donald Trump saying they're not concerned about Wall Street. This is why I keep telling you. They understand. They know. There's going to be an adjustment, which means there's going to be a hit there. Get diversified. What are you waiting for? Listen, you just had the president and the Treasury Secretary essentially say, we're not even going to look at Wall Street. Why? Well, there's going to be a detox. There's going to be an adjustment period. Patriot Radio News Hour. We'll be back with the jobs numbers when we come back. 800-951-0592. Quick look here at the markets on this Friday. The Dow is down 120 points. The S&P is down 26. The NASDAQ is down 100 points. The 10-year note, remember, it's been spiking because of what was going on in Europe with all the debt spending there. Right now, 425, so a little bit better. Crude oil's up $1. Donald Trump saying, hey, if we don't get this Ukraine-Russian thing deal done, I'll start sanctioning Russia as well. So probably the reason why gold is or oil is up. The other thing, they're going to spend $20 billion refilling the strategic oil reserve. So lately they haven't been putting any oil back in. So that announcement probably driving prices as well. Gold is higher again. You know what? Really, honestly, gold's just kind of sat there. Right around 29.20. It's been as high as 29.30, as low as 29.15, but it's just hanging out, right? Hanging out there. Silver lower today at $32.30. But again, they're giving you what you need to know, which that's a positive. I don't think we were getting what we needed to know from Janet Yellen and Joe Biden. You know, when Donald Trump said, I'm not looking at the stock market, you know, because he loves the stock market. You know, who doesn't? And kind of the reason why is he not looking at it? Well, it's not going to be so good. Then the Treasury Secretary today. Hey, yeah, there's going to be, you know, we were addicted to the debt. We're going to try to cut that out, right? There's going to be a detox period. The question is, we don't know how big is the detox period going to be. They made another interesting comment, too, about inflation. And I think this is the part that makes it a little bit scarier, I guess, when you think about what this trough, what this detox period is going to look like. He said that access to cheap goods is not the essence of the American dream. So he's kind of at this now. First, let you know there's going to be trouble in debt markets, right? Wall Street, the bond market. Then he says, by the way, there's going to be trouble and most likely higher in inflation. The American dream is rooted in the concept that any citizen can achieve prosperity, upward mobility, and economic security. For too long, the designers of multilateral trade deals have lost sight of this. So the Treasury Secretary, he just can't come out and say it, right? So said, hey, listen, the American dream isn't cheap stuff. The American dream is prosperity. That's his way of saying, get ready, right? Get ready. Things are going to cost more. When it comes to the jobs number, not bad, not great, not bad. 151,000 jobs created in the month of February, but there's a lot of asterisks with that. A lot of asterisks with the 151,000 jobs. They were expecting 170. The whisper number, I think some people were expecting that number to be lower. January was revised down. December was revised up. They 2,000 less, so it's kind of a wash. The big thing, job hiring considerably lower in January and February this year than last year. About 75,000 jobs less a month. The unemployment rate ticked up. So this is something we'll watch. 4.1%, so it's going that wrong direction again. Here was the thing that we're really was showing up in this. Over 7 million people now unemployed. They're saying that all the groups are pretty low. Teens have the highest rate of unemployment. But here's the thing that was big in this report. The underemployment rate. So this is people that want to work more. Okay, so I'm working, but I want to work more. We know this is a lot of the gig, the two-job economy. Did they lose one of those jobs, right? Or, hey, the job that I'm at is cutting my hours. This jumped to 8%. So this is a lot higher than we've been. By the way, the household survey where the unemployment number comes out dropped 588,000 jobs. That is a big jump and pretty significant what they're saying in the unemployment. That number, very noteworthy. 8% underemployment, 588,000 employment drop in there. They said that the number of unemployed workers rose by over 200,000. So the household says, so you got the government number, that's the Bureau of Labor Statistics saying 155,000 jobs created. They salt it, they pepper it, right? They put all the ingredients in there. The household survey, this is actually, hey, they call people. That's how the household survey, they're actually talking to workers. And that's what they said, a 203,000 increase in the number of people out of work. In that, they said that full-time employment, this has been a big trend, dropped by 1.2 million. Part-time employment up 610,000. Right, so that's how you got the 588. But essentially what the household survey saying is a lot of part-time work. And then on top of that, yeah, we got a lot of part-time work. But they still need more, right? They're not They're not able to string 2 and 3 jobs together like they were before. Wages, that was the other thing we looked at, still pretty hot, up 10 cents. I know 10 cents doesn't sound like a lot. It's not, but that's 0.3%. That was in line. By the way, over the last 12 months, wages up 4%. So it's still staying right up there. So that was the number today. The headline number, for me, I say better than expected. 155, because I was thinking somewhere around 100. So 155 I thought was a pretty good number. Unfortunately, all the other details in it, not so much. The unemployment rate going up, the amount of people, that 200,000 people saying, hey, we're actually out of work, 200,000 more people out of work, and then the people finding work only being able to find part-time work, and at the same time, still wage pressure. That's another big thing with inflation, that it's a sticking point. If wages are still up 4%, then you got to expect the same, when we look at inflation, and inflation probably running higher than that. Obviously, the Treasury Secretary today, hey, the American dream's not built on cheap stuff. And, oh, by the way, yeah, we're in a detox period. So, again, could have been worse, could have been better, but we're seeing Wall Street now, the Dow down almost 300 more points now. And that's what's been happening, right? We've been talking about price to perfection. Okay, no longer good enough, right? Okay isn't going to do it. And I think that people are going to have to get ready for that adjustment period. And the question will be, how long does it last? The longer it lasts, the harder it will be. Hopefully, it won't be very long, but unfortunately, that's normally not what we see, right? To be fair, that's a really rosy projection if they're saying this is going to be brief. And that's why I'm telling you, get diversified, put your gold and silver away. You got those big IRAs, take a chunk of it, roll it into a gold and silver IRA. We can help you do that. By the way, the London Metals Exchange has now updated the amount of physical silver that has left their vault. So last week, and even this week, I was telling you, hey, 40 million physical ounces of silver have left London since basically the end of November. That number has now been updated to 70 million ounces of silver in the London metals in January alone. So this is huge. This is we did 40 million, pretty much at the end of last year. 70 million in January. By the way, that is an all-time monthly record. That is 20% of the supply. It's interesting when we see these numbers coming out, when you see 70 million ounces, but then they're trying to say, oh, but don't worry, we got plenty. Kind of hard to rationalize that, but this is the thing. We talked a lot about gold. We haven't talked nearly as much about how much physical silver is coming in. And now that Donald Trump has clarified, and I don't know, this is the hard part. Let's just assume silver was part of the agreement that the United States, Mexico, and Canada had agreed to. Remember I said, right now, half of Mexico's imports won't be tariffed until April 2nd. 38% of Canadian imports won't be tariffed. I'm sorry, Yeah, no, 38%. That's right. 38% won't be tariffed till April 2nd. Let's assume that silver's in that 38 and 50%. When April rolls around, this could be another one of these really big issues, and we'll have to see how quickly does this silver start draining out of New York. We're getting a lot of intel in the gold side. The silver intel a little slower coming in, but it's coming in, and it's big. You know, they broke a record in a single month. Give you an idea, February ETF, this is North American only, 72.2 metric tons of gold flowed into North American ETFs. It's billions. It's like $7 billion that flowed into in a single. And listen, February, there's 3 less days. Well, 2 or 3, depending. By the way, the largest single monthly inflow going back to COVID. By the way, it was the strongest February ever. Patriot Radio News Hour. Big money saying, let's get diversified. You guys need to be doing the same. We'll be back. 800-951-0592. We still got rolls of silver $half on sale today. $255 a roll. Buy 25 rolls or more. Down to $250 a roll at 800-951-0592. Like I said, gold just hanging out here up $4 or $5. Right near that 29.20 level. Losses are picking up here on Wall Street, down 300, 350 now. The S&P's down 50. The Nasdaq's down 200 as the jobs number, like, not great, not horrible. Here's the thing: government only down 6,000 jobs in that number. That 155. So, which is there's reasons for that. They take, you know, the people that work in public schools that, you know, normally you have your Christmas break. They get back a little later in January, so they kind of move them into the February thing. So the March number is probably going to be worse. And by the way, last March we had a huge jobs number. So we know, listen, this detox, as Scott Bessent said, we know we're starting that. How big is the detox going to be? And I think they're being kind here. You can't cut spending the way we need to cut it and then throw tariffs on top of it and not expect to pay the price. Remember, we need next week. We either need a continuing resolution, which is what they're now going. Remember that one big, beautiful bill that looks like it's out. Thomas Massey has already said, hey, if you do a CR, so the rules were stating if you don't have a budget by April, which we don't, right? We've been running on what we call continuing resolutions, which simply says, hey, we're going to spend the same as we did before. Of course, the problem is interest is much higher, right? The debt keeps climbing. And then anytime you do some emergency spending, right, you got to throw that on top of it. You're supposed to cut by 1%, a whole whopping 1%. They don't want to do it. So I don't know if they're going to get enough Republicans to go forward. We'll find out next week. It's going to be an important week. They're going to get something done. There's no doubt in my mind they'll get something done. But how big of an effect is that going to have? And we're getting more out of the Treasury saying, hey, we're going to have to sell more short-term debt, which is going to be a big problem with everything that is going on and the amount of debt rolling over. This is really what's going to cause problems. We have no idea what the debt is right now. We're in this emergency measures. Once something gets done next week, hopefully there's a debt limit thing in there. They can still do emergency measures. They can still go into April with emergency measures. So we don't know, but the Treasury is anticipating even more short-term debt, that just means more pressure in 2027, 2028, 2029, right? Is the amount of debt that is going to roll over continues to be a massive problem for everybody. And I think this is why, that we're going to struggle because of how much debt. And now Europe, who, let's face it, they don't have the reserve currency. They want to throw in almost another $1 trillion of spending. This is going to be the biggest problem, I think, facing the world is who wants to buy all this debt? And this is why you're going to continue to see what? Think about it. What are we going to continue to see? Central banks saying, give me more gold. That's what's happening. And it's been happening now think about it. The central banks have been buying gold really since 2005. But it's on hyperdrive really starting in 2020, probably the end of 2021, but in earnest in 2022, 2023, 2024, 2025, right, where you see where this is headed. This is why I keep telling you. This is cheap here. I know it's but you're like, Joe, it's $2,900 and change. I mean, you can't buy an ounce of gold for less than $3,000. I know. But just remember that a lot of people told you gold was expensive at $500. I remember $500 gold very well. It was the first real run I was a part of. When I got her, gold was like $300 at Patriot. And it went to $500, and everyone was like, and gold kind of pulled back and went to like $400. Then it went to $700. And it pulled back to $500. Then it went to $1,000 and pulled back to $700. And everybody had thought, oh my gosh, this is crazy. Then it went to like $1,900. And they were for sure, okay, now that's crazy talk. Right? And this is after the financial crisis. Of course, Janet Yellen, the Treasury Secretary, we got it all handled now, and blah, blah. And gold went back, tested that 1,000, and then was off to the races. Right? Went all the way back to that 2,000, right? And you guys remember, we were at 2,000 for a while. Now we're sitting here at 3,000, just below 3,000. Has the situation, the factors for why we're at 3,000 versus 2,000 versus 1,000 versus 700 versus 500, have they gotten better or worse? See, and this is the thing. Why did gold go from 300 to 500 to 700 to 1,000 to 1,900 to 3,000? Right? Why did it do? And the answer is very simple. Well, they just keep printing money and printing money and printing money. And they print more and more and more and more. And now we're in a situation where listen, it's not rocket science. It's not even complicated. They've decided. What is that? What have they decided? We want to grow our way out. The whole world's decided the same thing. Spend. And people say, well, wait a minute. Trump's not spending. He's cutting. He's cutting to spend. Right? That's the big part. He's cutting to spend, and he's spending a whole lot more than he's cutting. See what I'm saying? Yeah. just getting started here. Remember, it went from 300 to 3,000. 800-951-0592. Some breaking news here, and it's good if you're in the gold and silver markets. By the way, our toll-free number, 800-951-0592. These silver half-dollar rolls, list. Buy as many as you can. They're $255. If you buy 25 rolls or more, they're $250. Eric Sprott was doing an interview the other day. By the way, he's the chief executive over at Sprott. And if you know them, they are huge players in the gold and silver industry. He's out saying there's going to be a massive increase due to a technical deficit. See, and this is what I like. We know that the silver markets, they're easier to manipulate. They're both manipulated, right? We understand that. Gold's breaking free of that manipulation, right? Why is gold up $1,000 in like a little over 12 months? Because the demand is overwhelming, and let's face it, it's hard to get it out of the ground. Silver, it's a smaller market dollar-wise, so the smaller it is, the easier to manipulate. Well, silver still, right, bumping around $32, $33 an ounce. That's not cheap. And it's getting harder. 70 million physical ounces in a single month. It's crazy, the type that we're talking about. But saying that where silver consumption is exceeding mining production, and I've been telling you, listen, we went 11 years of plus silver supply. We've now gone several straight years with negative silver supply. The largest supplier of silver, and it's not even close, Mexico. They produce double the amount of silver of any other country in the world. I mean, it's massive. Well, guess what? They're in a massive decline. Very similar to what's going on with Mexican oil, right? They've depleted their resources, and they haven't spent the money necessary to really make up for mines that are running out. And now the Mexican government's talking about, well, we're going to nationalize it, right? Because we don't like it when the big miners come in, and we get a little bit, but they get all the money. I don't know that that's true, but that's what they want people to believe. But Sprout now saying silver is going to skyrocket. Target price, this is our $250. Somebody is out there, Don Durant, saying 500. I mean, that's just, right, it's insane to talk about, but it's not. I can see both of these numbers entirely possible. By the way, my target on gold, 8 to 10,000. And I'm going to say this. Take 8. Let's take the lower number. That would put silver at 65 to 1 at like 123. Right? But we know silver, whether it's depending on the ratio. Right now, silver's like 89 to 1, which is historically high. It's been as low as 15 to 1, which is historically low. But when you start thinking about supply deficits, that's when you really start to look. 11 years of surplus, all of that surplus silver is gone. In 2 years, gone. because the surpluses weren't that big. The deficits are huge. Of course, Sprout is saying that, hey, once silver gets going, there's a chance that it, goes beyond the norms, right? That's how does it get to 250? Real simple. Hey, we could go down. Think about this. At 8,000, let's just say when silver went to 50, remember when silver went to 50? When gold was at like 1,900, it got to like 40 to 1. That's $200. At 10,000, it's 250. Very possible. Sprout is saying, hey, listen, this is likely that we could see a number much lower, which obviously would mean even higher gold prices. They said that typically when I buy, I don't have plans to sell. Sprout said he is confident about precious metal prices this year. Gold will be well north of 3,000. And I will hope, now he's used the word hope here, silver will be north of 50. So Sprout is saying, remember I told you, I think we're going to see 40. The problem is if you see 40, why wouldn't you see 50? And I think that's exactly what he's talking about. And this is real. You throw these tariffs on top. And I've tried to say this as best I can. 83% of all the silver the United States consumes every year comes from Canada and Mexico. 800-951-0592, an all-out buy on $50 today, $255, 25 rolls or more, $250. Final segment coming up. 800-951-0592. The Dow's now down 400 points. The S&P's down 70. The NASDAQ down 300. Gold continues to be up. Not a lot. It's up $4 here. 29.17. Silver at 32.20. Rolls of silver, $50, $255. 25 rolls or more at $250. Eric Sprott saying that he's hoping silver north of 50. No hope on gold. He's saying gold's going to be well north of 3,000, but also said $250 silver, get ready. Talking about supply and the lack thereof, which is the best kind. 800-951-0592. How about this? Thomas Massey and others ending the Fed bill. Now, we've seen this. Ron Paul would put this bill up every year. It would go nowhere. H.R. 1846. He's joined by 10 members. So this thing's growing. This is what we need. It's the Fed that has killed this country. Trust me on this. But here's the part that gives me confidence. Senator Mike Lee has introduced the same bill in the Senate. So this is again, this progress towards driving towards the ending of the Federal Reserve and this banking system. And the harder things get, the higher the inflation gets, the more you're going to see this type of thing coming. And you're going to see significantly higher gold and silver pricing, and it's something where it has to happen here. The worst thing that can happen, is a digital currency, and then they keep the Fed in place. By the way, did you see Donald Trump sign that executive order? It kind of was a letdown. Essentially, the United States government, we're not going to buy any Bitcoin, Ethereum, or others simply the Bitcoins that have been confiscated by the government, whether it be, tax evasion, illicit activities. They will use those to create this I guess, digital token fund that has been talked about. Bitcoin right now down a couple $1,000 today, around 86,000. I think they were kind of hoping, hey, he's going to buy a bunch of Bitcoin or this or that. It appears that they're just going to use the coins that they have taken from individuals out there. So not quite what they were hoping for, but hey, they've set one up. Again, our toll-free number, 800-951-0592. By the way, Russia now saying, hey, they're ready for a ceasefire. Unfortunately, Ukraine says that is unacceptable. We'll see how that's going to go. Donald Trump ratcheting up the pressure here and now threatening more sanctions. So here we go. Patriot Radio News Hour. Here's the thing. It's Friday. Another crazy week in the books. What's going to happen over the weekend? Yeah, get some more gold and silver for the way before then.